Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market, and using the tools available on stock charts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed. Well, we're trying to rally here, but the market's spent about a week going sideways, so that makes it a little more difficult. Trying to get a little bit of proper direction, and I think the S&P kind of hit around 2880 on June the 7th, and here we sit a week later and we're just kind of in the same range. So not really going anywhere quick. I think the real issue is that we're starting to get changing direction on some of the trade issues. So the China trade issues are still buzzing, but maybe there's some hope there. But on the other side, we've started to have some the oil issues in the Strait of Hormuz have started to pop up. A couple of tankers got hit yesterday or the last couple of days. Gold is actually making a move today and is trying to break out to the upside. And so we're going to cover that off a little bit because I do find it's one of the places that I think has good opportunity. The materials space has been trying to rally, and there's been a couple of reasons. So at the end of last month, one of the things that was going on was that all of the commodity countries actually held up pretty well in May compared to the other countries, most of them pulling back harder. So there was something going on in commodities, and one of the things we're starting to see is that some of the rare earth metals and some of the more unique metals are trying to rally a little bit more, and I think there might be an opportunity there from that perspective. I will say that there's a real interesting undertone in the market. As an example, JP Morgan has an index that they call business index or whatever, and it literally plummeted from 50 to 13 or something like that. So fell very, very hard. And so to see everything holding up in the face of all of this kind of dropping news just makes me wonder, are we getting farther and farther away from reality, or is the market ready to turn higher here and take a rip? But today we've got the semis under fire. So that's a problem. And I mentioned on Wednesday that the oil hammer candle was not following through. And what that means is we had a hammer candle to mark the weekly chart, but this week oil is traded back towards the bottom of that candle. We'd like to see it kind of up and away from there. And then lumber, there's been a lot of lumber companies trying to constrict volume to prop the price of lumber back up. So we have lots of issues out there. It really, I would just say it's taking more courage to trade here with everything going on. So I want to address the semiconductors because the charts in here are actually quite good. And last week, we can see that this AMD chart tried to break out and get back through prior highs. And then this week it's rolling back over again. So it's not bearish yet. It's just not comfortable. And here's Lattice Semiconductor, and this chart, did a 5-year breakout here in February, and it's just gently oscillating along, but it still hit a new high this week, so that was good. Cypress Semi pushed to, I think they've had a buyout up here. They pushed up to a higher high. Here's Adesto trying to get going, but that's new 52-week highs on that chart. Marvell Tech starting to break out here. So, these charts don't look bad. I guess the concern we have is we're up here at the high end of the PPO range. And now the question is, do we roll right back over, or do we just get in a sideways trend? So, and again, these are the strongest charts. There's lots more in this group that are significantly weaker. So just looking through this chart, like here's Brooks PRI automation. And what we see here is, a new 52-week high. Nothing wrong with that. When you're hitting new highs, you're not in a bear market. And here's First Solar. It's pushed up to new 52-week highs this week. So that's another bullish one. Ultra Clean. And so the question is, okay, so that's all working well. Let's just scroll to the top here and get to, go to the back end of the range. And what you see here is, here's companies like Micron. This is pretty much a downtrend. So you really have to be in the right space. Infineon, this one's making new 2-year lows. Amtech Systems just kind of living in the bottom right. This is actually starting to firm up a little bit, but the SCTR ranking, it doesn't have one. It's pretty, these charts are trending lower. And then if we just go, well, I'm going to keep scrolling here to get to the bottom. That's probably the shorter direction. The one thing that if we take the whole thing here and go look at the summary table, what I want to show on this summary, let's just go to 1 week, is that, there's some up, but these are a lot of the names that we don't know. And then this Ambarella, this one was big in the news a while ago, so it's at least having a better week. But the real problem is, Lam Research was one of the top performers, rolling over AMD. So some of these ones that have been more in the news lately have started to pull back a little bit more. So that's kind of the overarching concern here, is that the semis are trying to lead us out of this and haven't been able to do so. So I still have a little bit of stress going on there. This is the oils. And what I wondered is how much price reaction we get from the tanker hits in I'm going to do this differently. The tanker hits in the Strait of Hormuz. And with that, what we've got is, if we just go look at these intraday charts, these three here have very low prices, so let's not look there. I kind of want to look based on scooter ranking. And what you can see here, all of the news is out there about the tankers, but we're not getting a move one way or the other. It's not like stocks are plummeting. These oil stocks are plummeting, but they're definitely not rising. And the other issue we have in the sector is that natural gas continues to be weak and hasn't perked up much. So with the bigger picture for natural gas down near 3-year lows and oil just kind of holding in here, we can go get the oil chart. USO, I'll just go over here and do that. On USO, what we see, maybe a daily chart would be better. So we're living down in this bottom corner, and what we'd be looking for here is a turn up. And so the hammer candle we got last week was down in here, and I can show it to you on a weekly chart, and then let's just zoom in on 1 year. So what we were liking was we had this test lower, and we actually rallied back up, closed near the top of the bar and above the prior week's low. Nice, usually a nice place to look for a bottom. And what we had this week is, so far, we haven't been able to break above that prior high, and that would have been much more bullish. I will say the one thing I like here is that the PPO is pulling back gently, and if it was to start turning up right here, this is a nice place to enter. Our full stochastic is down around 20. So all of these things line up that this would be a better place to enter. With the overall oil business, again, it's slow. So what we've had is the global trade slowing. We've also had oil consumption slowing, or oil demand slowing. And with that, what's happened is we're starting to build inventories. And so the OPEC nations are trying to get together and control volume. And with that, the idea would be, well, does this bounce now, or when does it start to bounce? And so it's the longer term picture is that a lot of the big projects have been taken off the table, and so eventually we're going to get into this supply demand crunch, and we'll have trouble bringing bigger projects on stream in a timely fashion. And with that timely fashion, what we're talking about is, to get a mega project approved nowadays is a 5 to 10 year approval process. And then after that, you got your build. And so as all of these big projects have been held back, one of the major issues we've got is that when we actually do end up with more demand pulling through, we're not going to be able to meet that demand. So it's going to be very interesting to see how all of this sorts itself out. So one of the things today that we're seeing is that the gold sector is rallying. So here, as an example, is the chart for gold. And it's this push up here. And if we take a wider view on this chart, maybe just let me run back here and grab a few extra years. So what we're trying to see is, can gold get through this topping area here? And so this rally today is, breaking out to this new 1 year high. That's fine. What we also want to see is, can it break through this 5 year kind of friction level? And we're sitting at about 1370 on dollar gold. So this was 1352, and we've rallied up this morning, not quite up to 1370, but we're trying to get up through that level. And you can see this 1369, so that would break it out of here. But this 1377 level was kind of the biggest one in the range. So gold trying to work its way through here, and we had this big thrust kicking in here. And from that thrust, now is it just kind of a smaller wave where we're consolidating for the next move higher? And with the gap up this morning, it feels more like that. Going back to the actual gold names, as an example, Royal Gold or something like that, these charts are pushing up to new 52-week highs, and they're just starting to break out. So it's not like we've missed the move. Again, some of them, like Kirkland Lake, has been just a powerful chart, and it's pushing up into the top right-hand corner. West Dome is a smaller company, but it's been trying to break through this range. So you see the resistance we're up against, and we're trying to get through that. So if the gold stocks can start to all push through a little bit, that's going to make the difference to try and get this show on the road. Bigger companies like Agnico Eagle, you can see that breaking out here. And then we've also got other companies like Franco-Nevada. Again, over and over and over, we see them stuck at this resistance level. And the real question is, can they pop through? And I think when they finally pop, that's going to be a very decisive move, and we need to be aware of that. So if you're looking for something that I think is sitting right on the edge of being able to break out, something like the gold sector looks pretty good. And one of the reasons is it's also trading on the insecurity around the global situation. So few things to consider there, quite the opposites. But again, the semiconductor space hasn't been working out great. And so we're starting to look into some of these commodities. And again, commodities you want to buy low and try to get them as they start to move, rather than waiting until they've been running a long time. Whereas that move in NVIDIA a couple of years ago, it just went on forever. It was like a big 2-year move. So I think there could be something there for us. And again, watching these different sectors as they start to rotate is a pretty important thing to consider. I did go in and look at I want to go grab the lumber chart first of all. And the reason I want to grab lumber here is there's been a lot of supply restriction trying to fall into place. And you can see this move in the last week here, just literally rocketing this up and back through the 200-day moving average. And as such, we're having quite a few of the lumber charts starting to move. And if we just picked, just going to run down here quickly and get my lumber list. I think I call it forestry, but let's go grab that. So in these forestry stocks, what we're starting to see is, let's just do, it's not too big of a list. So just want to show you, some of these are Canadian, some are US, but here's Universal Forest Products. And you can see all of a sudden the last 2 weeks here, it's really trying to perk up, and that wouldn't take much to get through that $38 level. And that would be pretty important. Here's Domtar, this one sitting down in the bottom right. I can't even pronounce this one. I'll just go by the ticker symbol GLT. And what we see here, again, it's trying to push up, and look at the scooter ranking just getting up above 75. and the PPO above zero. So if it was going to start to run, this would be a nice place to pick it up at. Acadian Timber, this is Canadian stock, been grinding sideways for 2 months. International Paper, big company, it's sitting right under its 200-day moving average, and this is one of the ones probably more indicative that we want to watch. But you can see we tried to get a scooter or a full stochastic signal here, getting these to turn up. And again, the idea in commodities is you want to buy it as these turn up and then try and ride the wave higher. So in this case, it was quite a jerky ride. You can just see the full stochastic firing off often. But some of them get on a little bit better run. Here's Weyerhaeuser, and this one's had a big 2-week push, trying to get back above its 200-day or 40-week moving average. So I like that. I really like this higher low setup on there. So the momentum got really oversold, then puts in a higher low below zero, and then you'd like to take it on the turn out of here. So interesting place to look. Nina Paper, same thing here. This one's, I'll call it a more timid bounce than we just saw on the previous chart. Resolute Forest Products still grinding down into the bottom right-hand corner. Western Forest Products, this was down at 5-year lows and is trying to bounce out of here. Small companies. And then West Fraser Timber, another Canadian company, pushing up nicely. But you can see the idea here where these are all starting to turn. This Norboard, it's listed in the US as OSB as well. It's that particle board that you put on the outside of a new home or something like that. Rather than using expensive plywood, they use this particle board that they make out of wood chips. With that, this has been a big move. It was $25 last week or $26 last week. It's already over 31. So $5 move in a week on a $30 stock. Interfor, really a nice push here, trying to break out to the upside. And Clearwater Paper starting to base again. So we've got quite a few of these stocks that are trying to set up and get going here. And again, trying to buy them near their lows and get them as they're turning up. You don't want to wait too long. And this is the ETF for the whole space, wood. And again, it's making that higher low. So you got a double bottom in price, but you got a higher low here in momentum. This wouldn't be a bad place to catch it if it's going to start to break out. So I put that out as an idea. I think there's something there to it. This chart looks broken and it continues to look broken. So the fact that it can't rally when everything else is getting some rally is a bit of a concern. And then Canfor is one of Canada's larger forestry companies, and it's trying to make a nice push here after basing. So here's Resolute Forest Products. I didn't realize it had a U.S. listing. So drilling down in the bottom corner, and again, this is the lumber chart, and we're starting to see this downtrend in price break here. And I also like the fact that this downtrend on the PPO would be breaking and popping up near zero and starting to turn higher. So hopefully there's some ideas there. I did notice that natural gas is starting to pop literally in the last few minutes. The chart has started to take off. So let me just go get that. UNG. Well, it's hard to see here on this chart, but on we just go to a shorter time frame, 60-minute, we're starting to see this trying to base down here. And again, it's very near 5-year lows, or 3-year lows. So with that, what we're looking for on the big chart is that this is down here, and we want to watch this try to break out to the upside. The actual $ nat gas. I don't normally spend so much time on commodities today, but I do think it's one of the areas that's trying to change right now as we're speaking. So here's nat gas, and you can see this 3-year low that it's trying to break back above. Okay, so again, forestry is quite interesting here. Natural gas has been oversold. If it was going to start pushing up, you don't want to wait for it to get all the way to the top here, but you probably need more of a signal than the first signal we're getting here. But it literally is accelerating as we're talking. So that's something to look forward to. Let me go to UNG to get the intraday. on that. And again, maybe just talk a little bit about settings here. What I've done on this chart is this is a narrow Keltner channel. What you do is you put it in, it shows it as support as it gets through here, and then it breaks it and it lives on the lower side, tried to rally, stalled, came down here, and is now pushing back to the top of the range. So with a much higher low in momentum, this looks a lot better here. And again, if this was going to start to break out above this 2050 level, that would probably be something more attractive. Okay. Next, let's get into some of the other things that are going on out here with the broader market. What we can see is the Dow Jones Industrial Average down just a little bit this morning, but I think again, the bigger issue for me when I click on, let's use, when we're looking at the charts here, the one thing that I see is this grinding sideways here, and we just don't have any momentum, and we're right at near zero on the daily chart. So my concern is we need something to kind of get us pushed forward. The Canadian market, I think, has been grinding sideways for even more time. It's almost, an extra couple of days. So it's been like 8 days or 9 days now that it hasn't done anything. And the US market is on day 6. So just trying to figure out what's going to be the impetus to push us higher. And I know there's a lot of cycle charts that people have said, this is a cycle low that you want to buy and all that kind of stuff. I think the bigger issue is we need some sort of catalyst to push us forward. And we just haven't seemed to find that yet. Looking at this point in figure chart, we're just chopping back and forth, and we don't really have a direction at this point. So a breakout to higher highs, that would probably get everybody excited again and we could start running. But the fact that we're trapped in here is making it more difficult for people to engage. Looking at the S&P and at the NASDAQ 100, just going to shrink those down. Again, on the gallery view, so you could just see basically since the first of the month, we haven't done anything. And why did that do that? Okay, so on the daily view here, you could see just this tight, trying to hold above the 50-day. Same thing on the NASDAQ, trying to hold above the 50-day. Flat 200-day moving averages, those are really hard to trade against because they, normally we'd like a bias of the 40-week or the 200-day moving average. In this case, it was upsloping, so that's your bias. Well, here there is no bias; it's flat. Same thing back in here. So until we get a push out one side or the other of this range, this short-term range, I think we'll need to be focused. But looking at the full stochastic here, on a weekly chart, a bounce above 50. So normally what we'd like to see is that this bounces in here, and that's usually a pretty bullish trade. Back here in early 2018, it didn't work out that way. But you can see all the way through 2017, these pullbacks were all to be bought, and this is trying to fire off a buy signal right here. So continue to watch it and see if we can actually get turned up here. I don't know if it's going to come down to quad witching or which is next Friday, so that's an important date for us. And then we have the Fed meeting Tuesday, Wednesday. So maybe the market's just going to grind sideways for another couple of days until we get the outcome of the Fed working its way into the system. Okay. Lastly, I think the biggest thing for me, I have one chart I want to show you on, trying to think here. I have one chart I want to show you on the perf charts. And go into the predefined groups here and get into the sectors. And if we just take this and scoot it back to whatever, here's 60 days, that should be good. You can see that we have a mixed picture on the S&P over the last 3 months, where we've had defensives here on the right and a little bit of growth on the left, and energy clearly out of favor as oil's been collapsing. Well, if we collapse this down to 1 month, it hasn't changed much. And so this is materials which holds gold. So that's one of the reasons that started to move. And we've also had the rare earth metals debate. So all of these things are kind of feeding together to give us some information, but we're not seeing a whole bunch of a trend change yet. And through the month of May, we had a lot of we had a gentle pullback, and we had a lot of the defensives leading. Well, here we are over the last week. We've had discretionary and consumer communication services leading, and materials holding up, utility still holding up. So not really a clear picture. The one thing that's worrying still is financials in the last 4 days have basically sold off or underperformed what the S&P is doing. And if we just wanted to go to absolute performance, we'd untick this box up here. But we see the financials are down 0.5%, and everything else is trying to run a little bit more. So not a real clear picture coming through from the sector rotation. So as much as it's like, we'll try to get on board, I think the one thing that I'm starting to see is this materials area trying to move, and that's a little bit bullish. We also see some, early indications that some of these commodity-related countries are rallying better than the non-commodity centric economies, and so we're getting a little bit more pickup there. That's one of the reasons that's leaning me into these materials and energy areas. But usually we need industrials to perform a little bit better than that. So it is hard here just because we're grinding sideways with no real market direction, and we've got a few more days to go. If when I get into a situation like this, I'm trying to find the stuff that's outperforming, and we know we have the big names that have been performing well, but you can just go to these little tables here and try to find, this is top 10 moving today, but you can also use scooter rankings and say what is top up today. And I think the bigger issue in all of these cases here is trying to find sectors that are getting supported, and we just haven't really. As you can see, this chart is trying to break out to a new high, so that's a little bit more bullish. But Facebook pretty much jogging sideways here. It needs to get through its 10-week moving average. Sony Corporation, same sort of thing. This chart, Weyerhaeuser, I mentioned it earlier in the lumber discussion, and these restaurants turning it up. Okay, and then again, on the other side of that, what's not working? And one of the things that we've seen is a lot of the retail get really smacked down. So that makes it harder. So just going to top down these retail names that really haven't been able to hold up. And with that, that's been one of the weights on the consumer area. It's becoming more niche, and I focused in that on Wednesday. But as we look across these here, here's Broadcom, and this is down hard today, down 11% on the week. Fastenal, and industrial. So as these companies are breaking down, I think just try and be careful on the sector rotation. I think that's our biggest clues today. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 Pacific on Stock Charts TV. You can also catch replays on the Stock Charts YouTube channel or on Stock Charts TV, which has a running list of technical charting informational shows. Thank you.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.